morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, March 28th. Last day of the month, last day of the quarter. Keep that in mind. Mutual fund managers, they have inflows come in that need to put money to work. That should bode well for stocks and should at least stabilize the market, at least for today. Not that anything can happen, but we should get at least a little bit of another pause day, maybe inside day, or a nice little rally, which would be ideal for a short candidate. We'll get into that in a moment. Dow Jones didn't do anything, down 4. NASDAQ down 22. S&P down 3.5, and the Russell down $4. So very, very quiet in the indices. However, if you were in front of the screens all day, you could see stocks continue to sell off. Lots of stocks continue to sell off. So therefore, we have eager sellers at these levels, like I mentioned all week. So what are we looking to do? We want to see that the 4 or 5 day sell-off is for real, and that's going to be tested by the next retracement rally. Remember, we had that V bottom shape just a few weeks back when we sold off, an emerging market sold off, and then we sold off for 4 or 5 days, and we literally went vertical. So let's see if that happens. We don't want to be stuck looking to get short. But that does not mean that you cannot short the market on the next retracement rally. You're keeping your stops tight, keeping your risk tight. You absolutely can do so. So that's what we're looking to do. In the meantime, we're just going to be looking at key stocks, look at some selective setups, and if you can't find anything, cash is always a position, at least for the moment. But we do have some interesting developments. I have no indicators today. Nothing has changed. McClellan Oscillator is still showing that we're making lower lows and lower highs. And remember one thing, we are not oversold in the McClellan Oscillator, so there's plenty of room to run to the downside, okay? Now, take a look at the chart. You can see the ZB, which is the 30-year Treasury bond future, the June contract, and as you can see here, we broke out of this bull flag, and we are now in the middle of breaking out here. We had nice volume, so we had an accumulation day. As you can see, volume was higher than normal. That means that we have buyers that are getting out of equities and putting their money to work in bonds. You could see that in the utility sector. Utilities are one of the big leaders of March, if you go and take a look at that. So clearly risk is coming off, okay? And when that happens, you have to be careful, because when you have eager sellers coming up here, and we have a lot of buyers also that are trapped at these levels, and I'll show that to you in the E-mini S&P contract. But you can see here we're down 11 ticks. Normal when the market's up, we're obviously down a little bit, so that's not it. But this is the concern. You need to watch this every day. If you're not looking at the ZB, look at the TLT. It's the same thing, and I'll show that to you. TLT, that's the ETF, and this has broken out. Okay, so this to me is a very bearish sign for equities. Now, what happens when we usually break out? Well, we don't just go straight up. I mean, that does in some stocks happen, but in the ETF, more than likely we would get a little bit of a back test. If we can back test and make the high or low from this area, you could actually get in for a trade on a long side. Easy to manage. Your stops would be anywhere where your risk tolerance or where your trading plan says it to be, 8 to 20, anywhere in these areas. But I like to give it some more room, somewhere maybe back in this area here. But keep an eye on the TLT, guys. This is not a good sign for equities. Now, it could easily revert back. We all know that. It's happened many times. But I think I have a funny feeling this time it's for real. We have a lot of bearish patterns forming. We have indicators telling us that we are headed lower. This is the short term now. I'm talking maybe 4 to 6 weeks of some downside pressure, choppy price action, making lower lows and lower highs. And again, anything could change. So keep an eye on the bonds. Now let's take a look at the yen. As you can see, the Japanese yen here, we're just kind of holding right underneath this Fibonacci cluster. So again, the yen hasn't really broken out, but if you looked at a 5-minute chart, you could see that it had some movement here. Now this is last night. Let me just here you go. This was early on, and then boom, we had this break. Let me just get back on. I'm sorry, this was yesterday. Here we go. There we go. So as you can see, we rallied, and then boom, we sold off. We hit that extension again, and then look at the pattern. We ran back up. We sold off again. And now we're selling off again here. Now, this is a 5-minute, okay? So this is a really whippy. So anyway, watch the yen. If the yen starts to really take this out, now this Fibonacci cluster has held pretty much all of February into March, and now going into April. So it just looks like it's building up a little bit of energy. Now, obviously, it could fail to the downside, which would help stocks. But keep an eye on the yen, and absolutely keep an eye on bonds. Now, let's go into the index. As you can see here, the 1272 extension, actually capped the market as well, and we are unwinding this overbought reading on the RSI and stochastic, which is good. That's a good sign. We did break down here, as you can see. We rallied for a couple days, and now we sold off for a good 4 days, and now we're up 650 here in the pre-market, which is nice. Maybe we can get a little relief rally, buy some stocks that are way oversold in some good support areas, and then we'll talk about that in a moment as well. But again, a lot of traders and retail have been buying up here, thinking that we're breaking out, and so there's a lot of buyers up here. What that scares me, and buyers that are buying on margin. So that's a real scary no-no, especially when you have all these buyers that are buying the stock with borrowed money. That's very dangerous. And if you start taking out these key pivotal lows here, what's going to happen is just going to really fuel this market to move lower and quickly. As you can see, risk happens really fast. Risk off happens quickly. So just keep that in mind. But anyway, we're up at this area, and I'd like to see a retracement back up into some of the key areas of moving averages, maybe on a 15 or 30-minute chart, and look to see where we go. And I'll show that to you on the hourly. Here's the hourly chart. We said we had that head and shoulders pattern. We did break the neckline. Now we're back testing it, which is normal. And this is what we like to see when we do trade a bearish pattern, such as the head and shoulders. We let it break, and if it does break, the first trade's really just a quick trade. Now the second trade to establish would be what it's doing right now. Remember, I mentioned that a couple days ago. We want to see this flag into some sort of resistance, which would be obviously right here. You could see this area here. We're coming into a resistance area. Now we don't want to break up too high. That does not mean that you can't short it. But as you can see, we're breaking here. We didn't break. We still haven't broken the neckline. The neckline comes in right around this area here. So if you take it from this corner, well, we did break it a little bit. I'm sorry, and then we actually rallied. But now the next break will be below 1841. Will basically solidify this, and then your next area will be the 1817. So take a look at the hourly chart. As you can see, we got a nice clean head and shoulders pattern. We identified this early in the week, and now we're just kind of flagging here. So I like to see, let's take a look at the 30-minute. I like to see this actually really start to accelerate. But I would love to see this actually come into the 1848, 1850 area, and then easy to manage. You put your stops up in this area here, maybe 3-4 ticks. 3-4 points, and then look to see if we get some downside momentum that continues. Okay, but I do like the ES, and again, markets will bounce even though we're in a downtrend. Right now, we are in a short-term downtrend, but I would really use caution here at the moment if you're looking to buy a lot of long trades, because it's just this is not a good pattern. You can see what the choppiness that we've had here. It's just absolutely terrible. I mean, this is going on for 6-7 days. You know, we gap up and we fade, and this has been a never-ending thing. Let's see what happens this morning if we can hold that 6.5 handles in the ES. All right, now let's let me just run through some stocks here. Let's run through some of the sectors. I don't have all of the charts because really nothing has changed. We're kind of put in a doji candle, which indecision, and we're clinging to the 50-day moving average. This is the transports, really in bad shape. It looks terrible. A lot of the stocks did some technical damages on the charts itself. Let's take a look at the Qs, which really got hammered with the momentum stocks, and we had big biotechs, the Celgenes, the Amgens, the Gilead, GILD, BIIB. They've been really getting hit hard, and in the Nasdaq, they're heavily weighted in that. So really ugly pattern in that. And then you could see that as well in the transports. IWM, same thing, just ugly. Risk off. This is a good gauge of risk. I've always mentioned that when you have the Russell 2000 really starting to sell off. When it goes, pretty much everything else goes with it. Now, for today, you want to look for clues to see if the Russell can actually start to rally. If this starts to rally, you can get a good retracement rally to the upside and get a good good follow through and look to be long stocks today. And that's what I'm looking for today. We're so extended right now in 5 trading days. We had 5 nasty trading days from last Thursday, I believe, or Friday. So we got a good week of some continuing selling. I would love to see market stabilize here, get our signal to get long, and just get long some good quality stocks that have been beaten up. And one of the sectors I do like is energy, and I've been saying that for a while. If you could see Schlumberger, SLB, we'll go into some of these stocks. Look how it's doing. It does not care at all what the markets are doing, and that's what you want to get involved in. Okay, National Oil Well. I like this stock. I like the area here. Yes, it's below all of the averages, but this is where you can buy some real cheap, out of the money calls and have a golden nugget trade here. This is something that I look for, and you can just sit on it. And if it doesn't work, it doesn't work. You risk the premium, or you risk half the premium, and then you look to get in it again on a break above the 200 here. So I love the National Oil Well, Schlumberger. You get the Baker Hughes, and these are the oil services. Look at that. I mean, nice bull flag pattern right up in this area here, and now breaking out. Okay, but again, if you didn't buy it 3 days ago, it's a little extended now, and I mean extended meaning it had a 3-day run, so it's not a great entry, as far as risk reward. I'd like to see pullbacks in the energy sector, and then look to get in. Now, stocks like the Solar's just totally got decimated. You could see that. Trina Solar on the 200 as well. So take a look at FSLR, and this is one of my favorites. It actually pulled back only at the 38% retracement here, 1/3 of the move. It didn't even get me to come back in here. I would love to see this thing come in so we can scoop some of that up. But as you can see, the banks, Goldman Sachs, I thought Goldman was looking to stabilize here. Goldman really just took it on the chin. As you can see, we had this little symmetrical triangle, pennant, if you will, and then we just literally broke down here. Morgan Stanley here, I like Morgan Stanley. Now, obviously, you could see I like that they're looking to buy back shares. I like that they raised their dividend. Nothing big, but to me, it passed the stress test. This is a stock that you want to look at when the markets do stabilize. So I like Goldman. Now, Citibank obviously now has its own issues again, back at the lower end of the range here with the stress test that it failed. So I wouldn't buy it yet, but I do think that Citibank here is going to be something that you want to watch and put away once it does it manages its own little problems with the Federal Reserve. But I do like this Citibank. I'm going to put off to the side. J.P. Morgan doing really well here, and this is another stock you can buy today on a rally, or even, like I said, even Goldman for that matter. But look at some of the sectors that held up well the last 5 days, and that's the sectors that you want to go to today if the markets continue to stabilize and the pre-market following through to the opening bell. You want to look for stocks and the sectors that have stabilized, because they're going to go first, and those are the stocks that are going to rally pretty hard if the market does indeed rally, maybe today, following Monday. But remember, guys, this market should rally and today, and even follow throughs tomorrow. Don't think that the markets are going back up, at least for now. Let the market prove itself that we are indeed going to head higher, or we're going to fail and roll over. And when that happens, that's when you want to be ready to be short. Okay, and then you can start putting on some swing trade shorts. At the moment, I like to keep the pallets dry. I like to keep it guns loaded and just wait and see what happens, and then really start to pounce. When we really know that the markets are headed lower, this correction could last 8, 10, maybe 12, 13%, and it could go rather quickly, as you can see here. So let's be ready for that. And if the markets want to roll up higher, fine, we'll be ready for that as well. Okay, have a great weekend, and we'll have a full report for you on Monday. Take care, everybody. Be careful out there today.